All right.
Believe it.
All right. All right. So we're ready. We're good. Yeah. All right. Well, good morning, everybody. Thanks for being with us here this morning. I'm Dave Coulter, obviously the Oakland County Executive, and I'm here and pleased to restart an Oakland County tradition, frankly, and that this is our 35th annual economic forecast. In partnership with our friends from the University of Michigan, and that we postponed this from May because of the pandemic. So really excited that we're here now, and thank you, gentlemen, for being with me. I'll introduce my guest that I'm here with in just a moment. But while today is focused on the economy and the economic outlook of Oakland County, the health and well-being of our county and our residents continues to be paramount. And I think our economists will tell you that controlling the virus is still a critical step to our economic recovery. So let's be clear about that. So the forecast highlights, I think, what we all know. So we'll start with that, which is that our friends, our neighbors have been laid off, businesses have been shut down, community activities paused, that frankly, Oakland County, like all counties in Michigan and throughout the United States, have been hard hit by COVID-19. Oakland County in particular, where we really were at the forefront of this virus back in early March. And I think it underscores how important it is that we be aggressive in the distribution of our CARES Act and our public health orders. And we've tried to take that posture from the very beginning. But it also, I think, underlies, and what you're going to hear today, to me, underlies our strengths, which is our economic diversification, a well-educated labor force, and I think these are the things that are going to help us recover as a county, and I think you'll hear that in the presentation from these gentlemen. And it reinforces to me why we can't be complacent about addressing issues like educational attainment, childhood poverty, housing, and the next generation of economic opportunities, and leaning into all of those things in Oakland County to make sure that when we do recover from the COVID-19, that we continue to be on a solid foundation and footing going forward. As many of you know, Oakland County got $219 million in CARES Act funding from the federal government, and working with our Board of Commissioners, we've worked very cooperatively with them, and we've appropriated all of those funds now. So we've spent, or at least we've allocated all $219, and we're implementing just a whole host of new and I think innovative programs that support all aspects of the Oakland County ecosystem. I'm not sure our charts are working. We're all working in a new normal. I know you're tired of hearing that, and everything is technology now. But there are a couple of charts that I'd like to highlight if we can bring them up. If not, I can talk about them. It doesn't look like they're coming up. But we have been aggressive about allocating those funds to support our small businesses, to support our nonprofit organizations, to support our residents, to support our local communities, what we call our CVTs, our local cities, villages, and townships, which did not get federal aid. And so making sure that they had the money that they need to address their COVID-related issues. Our cultural institutions, and I would emphasize our schools. And even though Oakland County does not directly have direct responsibility for operations of the schools, we've really leaned in to support our school sector and helping them get open in whatever shape that looks like going forward. And that's been an incredible challenge, and I want to applaud the school districts throughout Oakland County, the ISD and the like, because they've really done an incredible job. So in terms of the business support, so we have distributed $74.9 million in business support. It's been awarded, I think we've got our charts working now. So there's the chart I told you about in terms of the 5 buckets of areas of support that make up, and I said $219 million, but we also got another $12 million in state aid, so that brings the total up to $231 million, and you'll see the buckets of support there. So now I want to focus on that light green box of business support, because we really leaned into this. Now, we've already supported over 8,500 small businesses in Oakland County, and by the way, that number continues to grow. We continue to get grants out in that space. We expect that to be well over 10,000 by the time we're done. But take a look, but think about this. These businesses, mostly small businesses, employ more than 65,000 workers in our county. Almost 2,000 of them are minority-owned businesses, because we know that this pandemic has revealed disparities in not only health but education and economic. 2,000 of those are minority-owned businesses. More than 2,000 are women-owned businesses, veteran-owned businesses. Really critical. And I want to go back for a second. I want to just highlight that last group. We really leaned in on our manufacturers, because we were finding that we couldn't get the PPE supplies we needed, and a lot of times we were begging and borrowing from China and other nations, and we knew that we had the manufacturing might right here in Oakland County, so $10 million of that went to help our local county manufacturing companies convert over to making face masks and face shields and the other PPP that was so critical. So really important, I think, part of that. And then the final chart simply illustrates, if we can bring that up, just that this money has been equally distributed throughout our county. We have great businesses all over the county. Oops, I think we went a little too far, but and that we've really worked with all areas of the county. We partnered with our local chambers of commerce, our DDAs, our local officials, and really made sure that the recovery efforts were felt throughout the county, and I feel really proud that we've done that. I also feel like we're trying to get this money out the door as quick as possible and get it in the hands of our business owners and our residents and others. But I think it's important that Congress extend the deadline for CARES Act distribution. When it was originally created, all the monies had to be expended by the end of the year. And if there's any congressional members on the call, I'd like to just reiterate that we think that even without additional money in this category, if you just extend that deadline, it would help us make more impactful and thoughtful decisions about how we get rid of the remaining funds. And, that they approve another round of funding. We know that we're not through this pandemic yet, and especially for our local communities, our schools and businesses, local governments, that another round of funding is critical. Our recovery, I think, still depends on state and local governments being full and active partners in this recovery. So with that sort of overview of what we've been doing in Oakland County, I am really pleased to introduce two people who need no introduction if you've been coming to these economic forecast luncheons in the past. First, Dr. Gabe Ehrlich is here. He is the director of the University of Michigan's Research Seminar in Quantitative Economics. In the short version of that is he's a lot smarter than I am about economic issues. And his partner in crime is Don Grimes, who is a senior research area specialist And he's been engaged in state and local government forecasting for over 40 years. He's been involved in all 35 of the economic forecasts that have happened here in Oakland County. So he knows our county very well. And so they are here with us today, and the reason that we're doing this press conference this morning is because they are going to unveil, and I hope you'll all get a copy of this, but their report on the 35th Annual Economic Outlook for Oakland County. So, Doctor, I'll start with you and turn it over to you to talk a little bit about your findings.
Well, great. Well, thanks very much. And can everybody hear me okay? Great. Well, thanks very much for that kind introduction. And I don't know if staying in school until my 30s makes me smart or makes me a glutton for punishment, but I think a lot of times it feels like it was the latter. But in any case, it's a pleasure to be here today to be able to share our outlook for Oakland County despite the unusual circumstances. And I'll just jump right in and summarize our forecast briefly, and then we'll be happy to take questions. As County Executive Coulter mentioned, COVID-19 hit Oakland County early and hard. And new cases peaked at nearly 300 per day in Oakland County on a 7-day moving average basis in early April. Fatalities in the county peaked at roughly 25 to 30 fatalities per day from COVID-19 in mid-April. We have seen a substantial reduction in the burden of the disease since then, and new cases are now running around 70 cases per day, again on a 7-day moving average basis. And as of Friday, which is the last time I was able to look at the data, there was one fatality from COVID-19 in Oakland County over the preceding week. Just to be clear, we share County Executive Coulter's assessment that the economy cannot recover completely until the public health situation improves and workers and consumers can go about their daily lives safely. So turning now to what the high-frequency data are telling us about where Oakland County's economy is now, one positive development is that consumer spending in Oakland County has largely recovered from the pandemic. One concerning development is that the number of small businesses that are open right now is still running about 25% below where it was before the pandemic in Oakland County. And I think that really highlights the importance of the work that County Executive Coulter and his team are doing to get assistance to the county's small businesses. We think that's a really important step in the county's recovery. Looking ahead, we expect U.S. real GDP to grow by about 21% at an annual rate in the third quarter and about 8% in the fourth quarter of the year. And that would leave the U.S. economy down about 4.4% relative to where it was prior to the pandemic. We're expecting about 3.6% growth in 2021 and another 2.4% in 2022. So just to make that concrete, we expect real GDP in the United States to be fully recovered by about the third quarter of 2022. Of course, light vehicle sales are always an important economic indicator here in Oakland County. We had about 17 million unit sales in 2019. We're forecasting sales to fall to about 13.8 million units this year, before rebounding to 15 million units next year and 16.1 million in 2022. Those are lower numbers than we've seen recently, but it's important to point out they're well above the levels we saw in 2009 in the depths of the Great Recession. So turning now to job growth here in Oakland County, we estimate that Oakland County lost about 156,000 jobs in the second quarter. That was nearly the same amount as Oakland County's job losses over the entire decade of the 2000s. So the scale of the challenge really is quite large. Oakland County has seen a solid rebound in the high-frequency data so far. And so when we put the numbers together and we look on an annual average basis, we're forecasting that Oakland County will be down about 68,000 jobs in 2020, and then will recover about 39,000 jobs in 2021 and another 14,000 in 2022. That would leave the county down about 15,000 jobs relative to its 2019 level, or about 2%. So that's the broad outline of our forecast. And just to point out, we are forecasting a faster recovery for Oakland County than for the state of Michigan as a whole. Just to give you a little bit of industrial detail, and my colleague Don Grimes will talk about this at length in our presentation, the low-wage service sector has really been hit harder than the blue-collar sectors or the high-wage service sectors here in Oakland County, and that's part of a national trend also. We expect blue-collar jobs in Oakland County to recover completely over the course of our forecast, and we expect a pretty solid recovery in the high-wage services sectors. it's really the low-wage service sector. So industries where there's a lot of face-to-face contact with customers and employees that we expect to lag in terms of the recovery. And of course, a lot of that is dictated by the pandemic itself. So with that, we'd be happy to take questions and share more. Thank you.
Anything to add before we go to questions? Don?
Yeah, oops. Gig was alluding to the fact that essentially the growth in the low-wage service sector is going to lag. And those are the jobs for a lot of people who have less educational attainment, who are just getting into the workforce, young people. And as we go forward, I think we have to be cognizant of the fact that the pandemic and our forecast of how the recovery is going to unfold will exacerbate inequality issues in Oakland County, as well as in the state of Michigan and the nation. And I don't think that that's, just keep that in mind. The recovery is doing really well. We're above trend, but over the longer term, we're going to have to be cognizant of the fact that it's not equally distributed.
Thank you. All right, so with that, we are happy to take your questions. And I think we have some folks on the line. I'm going to look at Bill to tell us who might have a question or how we're going to, how we want to handle those. So Mark Cavett at the Oakland Press, I'm told, has a question for our panel. Yes.
Thanks, Mark. That's for U.S. real GDP. So one thing about our forecast is that we do expect GDP to run ahead of employment, and a big part of the reason is that it's really high wage jobs we expect to recover more quickly than lower wage jobs. So we don't expect a full recovery in terms of employment in our forecast. We expect Oakland County to be down about 2% in 2022 relative to where it was before the pandemic. But we expect U.S. real GDP to get back to where it was before the pandemic sometime in mid-2022, in the third quarter officially in our forecast, but you know, around there. Again, that's because we do expect higher wage jobs to recover more quickly than lower wage jobs in the recovery from the pandemic, and that drives a little bit of a gap between GDP and employment. Yeah, so I think, you know, it's really important. The first thing to say is we are not epidemiologists. We're economists. Unfortunately, it turns out that everybody's got to be an amateur epidemiologist, you know, in order to put together an economic forecast. I do want to say our colleagues at the University of Michigan School of Public Health have been very gracious with their time. We have had a chance to talk with them. In no way does our forecast, you know, reflect their views. It's our own views. But we have had a chance to, you know, to kick the tires a little bit on these assumptions. I think, listen, this is absolutely the biggest source of uncertainty in our economic forecast, is what is going to happen with the pandemic. And I think it really remains to be seen. You know, the burden of the disease has declined since the spring. As the weather starts turning colder, as schools are reopening, as more economic activity moves indoors, I think there's a real question about what's going to happen, and I think we would be the first to admit that we don't know. So, you know, we really wanted to be upfront about what are the assumptions that we used to put this forecast together, and that was the assumption. And one thing to point out is we really are doing so much more testing now, and people are taking so many more precautions. If I don't know exactly what you see on your screen, but you know. County Executive Coulter is here wearing his mask. My colleague Don Grimes is wearing his mask. I'll be putting my mask on as soon as I shut up. And so, you know, people are taking more precautions. There's much more testing capacity. And what we're hoping is that's going to prevent a generalized outbreak of the type we saw in the spring that really necessitated, you know, wide-scale stay-at-home orders and shutdowns. So we're not saying that there's not going to be an impact on economic activity. There will be. We do expect restrictions to remain in place. But what we are assuming in our forecast is that there won't be an uncontrolled spread of the disease like we saw in the spring. I'm sorry, Mark. Could you repeat that question?
We might need more volume. Just yeah.
Yep. hmm Great. Well, thanks, Mark. So I'll actually move to your second question first, and just say, we are not experts on Oakland County's tax situation. We did not study that as part of this report, so I will defer that question to County Executive Coulter if he'd like to, take an answer. Would you like me to answer first on the
Yeah.
recovery? Yeah. So
Go ahead.
just talking about the pace of recovery here in Oakland County, I think there's really two important, the two most important things that will determine the pace of the economic recovery. The first is the course of the pandemic. And we've already talked about that. So we've assumed that there won't be a return to the uncontrolled spread of the pandemic that we saw in the spring. That's the most important driver of the economic outlook in the short term. The other really important unknown right now is, are we going to get more fiscal stimulus from the federal government? So just to be really clear, the federal government is the only entity in the economy that can borrow at the scale necessary to smooth the short-run cost of this pandemic over time. And when you look at state and local government employment, certainly here in Michigan, we really are looking at a difficult situation if we don't have more federal support for state and local employees and state and local governments, and also if we don't have more support in the form of unemployment insurance. We still do, despite a pretty solid recovery so far. We still have very high unemployment, and we really are looking to Congress to extend additional relief. In our forecast, we have assumed that there will be some additional stimulus forthcoming, but we're getting into the second half of September. We are in the second half of September here. We don't have a deal right now, and so I think we have to be realistic that there might not be a deal. So I think that those are really the two big unknowns right now.
And then, Mark, let me just say to your first point about, this, if I understand it correctly, sort of the policy strategies of Oakland County to recover economically. Is that what you were getting at? Oh, you might be muted or. Let me just say that I don't know if you're on mute, Mark, but one of the things that we had started before the pandemic was a new economic development strategic plan, because we knew that we had to look further ahead, 5-10 years down the road, to see what the opportunities are going to be, to see where our challenges are now. And we were knee deep in that work when COVID hit. Now, the good, if there's any silver lining to COVID, it's that it's helped us. It's made some issues more stark. It's accelerated some challenges, but it's also sort of helped shine a spotlight on some of the opportunities as well. I'll give you just a couple of examples of things that we continue to believe are important as we navigate our way as a county out of this V-shaped recession that we've been in. Workforce and making sure that we have talent in this county. Before COVID, the business owners that I talked to said we don't have enough talent and workers in this county. And we knew, as the state knows, that we have a shortage of skilled workers in this county. And that's going to continue, even though there's a short-term pause in that. We have a high, temporarily high unemployment. We believe that going forward, talent attraction and retention and getting access to a degree or a certification that gets you qualified for a good paying job is going to continue to be paramount. That's why we launched Oakland 80 back in February. But I believe that that's going to continue to be critical if we're going to recover fully and bounce back like Oakland County needs to. So that is certainly one. I want to point to our manufacturing base. A lot of people think of manufacturing as being sort of a Rust Belt thing that we're moving past, but the reality is that we have a strong and robust manufacturing sector in Oakland County, over 6,000 manufacturing businesses, and helping them prepare their operations for the jobs of tomorrow through, what the industry would call Industry 4.0. But there's ways that we can lean into that and make sure, and we saw that when our own manufacturers were being hit hard, we helped them convert to making PPE and the like. I talked about that earlier. And we think that continuing to support our manufacturing sector is another way. So we're going to continue to look at their report, which is their unbiased, snapshot, but we're going to use their data and what this virus has taught us to make sure that we continue to lean in on the challenges going forward and make sure that the foundation continues to remain here in Oakland County to be successful over the next decade. All right. Mark, is that the end of your questions? Yeah, I can. It'll be helpful if maybe they even amplify your voice. Go ahead. Yeah. On county government operations? Yeah. So the good news is that, unlike what we've seen at the state level where they're funding, I guess they're projecting $1 billion deficit now. The city of Detroit is like $400 million, but the fundamentals are different, and I'm not picking on them. I mean, this has been unprecedented for all of us. But the good news is that in Oakland County, primarily because our revenues are property tax based, and this situation has not been as devastating to property taxes as, say, the Great Recession was, we're in good shape. We have, between the money that we got from the CARES Act and the money that we got from the state of Michigan, we have been able to support all of the programs that I talked about earlier. So all the business support, all of the city support, all the school support has come out of those dollars. We haven't actually used a penny of our fund balance at the county to pay for these programs. Now, as we know, we don't know if a second wave is coming. We don't know if there's economic impacts of that. But at least to date, it's been very good news for Oakland County. And so we did not have to ask our employees to take wage concessions. We did not have to lay off employees. We had some temporary furloughs that we're working through. But frankly, we have navigated this from a financial perspective about as well as you could expect. And if you don't have to dip into fund balance during something like a global pandemic, that tells you that you had a pretty good foundation to begin with. And with the support of the CARES Act, I can't emphasize that enough. If that support hadn't come through, it would have been a different scenario. And so it's partly why we support another round of funding, even if it's not directly Oakland County, because the state has a deficit and some of our local counties and communities have deficits that will make it harder for the state to recover going forward. But the good news is that we've been able to manage that strictly with the assistance that we've been given from the feds in the state. Thank you. If you're on the line, unmute if you have a question for me or our friends from University of Michigan. And I say friends even though I went to Michigan State because COVID has upended everything. So we're all in this together, right, gentlemen? And when it comes to the pandemic, we are all in this together. Anyone else on the line that has questions for us? Chris Hall from the Free Press. Nice to hear from you. Yeah, I think we can hear you okay.
Yeah,
Repeat the question just so
absolutely. Yeah. So just and Don, if you wanted to take this out, so just to thank you for the reminder to take my mask off. We were all adjusting to new circumstances. So just to make sure I heard the question correctly, we talked a little bit about the diverging outlooks for what we've called lower wage service sector jobs versus other sectors of the economy, and we're a little more pessimistic about the prospects for the lower wage service sectors. Did I get your question right? And just some examples. So great, excellent. So I think it's really important to be upfront about this. The pandemic really has affected lower wage service sector industries disproportionately, and so you can look especially small businesses, retail trade. So bricks and mortar stores businesses down. There are precautions in place for social distancing. More business has gone online. And then, the other major industry to look at is leisure and hospitality. So think of restaurants, bars, hotels, the hospitality industry. So really, it's businesses where there's a lot of in-person interaction, so face-to-face, where it really, the pandemic has prevented a lot of that activity. And what we're seeing is businesses are having trouble, making ends meet right now. And so that we expect that the recovery is going to be more difficult. Just the length of time this has gone on is making it harder and harder, for some businesses to keep their doors open. And I think that's why, if you heard County Executive Coulter's remarks, that's why the county is so focused on getting assistance to those small businesses.
Can I just add to that question and ask you another question?
Sure.
Because especially when I think about retail and our bricks and mortar companies, which were already being impacted by the likes of online and the Amazons of the world. So to what degree do you think COVID has just simply exacerbated a trend that existed already? And to what extent can we mitigate that, if possible, as we go forward? I'd be,
Yeah, I think that's a great. So now I'm taking questions here from my coming from all sides. But in any case, no, I think it's a really important point. When you look at the retail sector, there's no question there was a pre-existing trend. Activity was moving online, and also not just online, but also away from mom and pops towards the big box stores, and those employ fewer workers, per dollar of transaction. So employment here in the state of Michigan in retail, and this is really a national trend, has been declining even before the pandemic. We really think that to some extent the pandemic accelerated that trend. So that's a pre-existing trend. The pandemic is bringing some of that forward. We don't expect that to be reversed. I think the pattern is different in leisure and hospitality. So again, bars, restaurants, hotels. That was growing prior to the pandemic. There was not, that was actually an area of pretty decent growth. And we do expect that to come back once it's safe. It's going to take time because, of course, we are having business failures. We do still have a pandemic. But so there's really diverging outlooks in those two sectors.
Thank you for letting me play reporter. Is that it for you, or any other questions? Christina, is that? Okay, thank you. Anyone else on the line? Do you want to unmute yourself if there's anyone else that would like to ask questions of our panel or myself? Anyone else? All right, then I'm going to ask the last one. I know this isn't what they planned, but I had a chance to talk with our friends from U of M before, and Don, you mentioned sort of the inequalities and inequities that are sort of, we are inherent in the system and to some degree are spotlighted on here. One of the charts that struck me, frankly, was, wage growth over the last 20 years has been relatively flat. Even as profits have grown and the stock market has done well and employment until COVID has done well. Talk just a little bit about what the underlying fundamentals of that are and what we need to do if you're concerned about that, and what you think we need to do to sort of address, I would say, what concerns me, which is relatively flat wage growth and the tied to that, the inequities in our economic system today.
Well, first, I want to say one thing. I grew up in Oakland County. So actually, the fact that I've been working on a forecast for Oakland County for 35 years has had special meaning to me, because this is my hometown, so to speak. So I've been very happy to have participated in that. I was going to say that earlier, but I forgot.
Thank you. I didn't know that. Thank you.
We have, I think, the longer-term issues for the state and the county and even the country are, you have two opposing factors. One is the fact that we're going to be facing labor shortages. Now that people will look at me as like I'm crazy, but we do not have labor force growth that we need to create job openings or to fill job openings for employers. So you get looking at the data beyond 2022, 2023, 24, 25. Longer term, one of the biggest issues that we are all going to face is that employers are not going to be able to find workers. The second aspect of the problem is that we have a large segment of our population that are just not adequately participating in the economy. That's showing up as unequal income growth, unequal opportunity, but those people are also the potential for expanding the labor force, expanding productivity. So somehow if you can mitigate the needs of employers for future workers with the need for these potential workers for higher wage jobs and to be more productive and more contribute more, that I think is a longer term challenge for you.
Thank you. Thank you. Again, thank you for letting me play reporter, but it's something that my administration has been focused on since before COVID, and I think your report and your comments just sort of highlight the need to continue to lean in on things like the Oakland 80 initiative, where we're going to try to increase the number of people in Oakland County who have either a college degree or a certification, a skilled trades, because one of the things I hear a lot is that our employers need skilled employees, but I also hear from our residents that we need good, better paying jobs, and that disconnect is, I think, a role for the county to help play through our workforce development efforts to make sure that we're getting people the skills that they need and the skills that our employers need. So to me, at least in part, that's we'll continue to lean in on that program as a way to help address that. So. All right, so with that, if there's no further questions, I just want to thank you for joining us today. I want to thank my U of M friends for joining us, and we're going to go get ready for our 35th annual Economic Forecast Luncheon, which is virtual this year. So thanks, everybody, for joining us. Well, good afternoon, everyone, or morning still. We're here to restart an Oakland County tradition, our 35th annual economic forecast with our friends from the University of Michigan that we had to postpone in May during the height of the pandemic. Now, while the focus today is on the economy, the health and well-being of our residents really remains paramount for all of us. We have rightly sacrificed to save lives, and we must continue to suppress this virus. I want to start as appropriate by, hopefully, if I can get it to, with a slide, which is our dashboard of our health outlook. There we go. Because our cases are just stubbornly plateaued, and it's critical that we follow the advice of health experts to wear the masks, limit gatherings, social distancing, all the things we've heard about. And our health experts have another emerging concern. Our case investigators are finding that people are still going out when they have symptoms and that they're not feeling well. Now, I know that we like to be tough and we like to power through these things, and we did that before. This is not the time to power through. Please stay home if you feel sick and be more self-aware than ever of how you're feeling. I think our economists are even going to tell you today that controlling the virus is an important step to recovering our economy. The forecast highlights what we all know. With our family and friends and neighbors laid off, businesses shuttered, community activities paused, Oakland County was hard hit economically by COVID-19. And it underscores how important it is that we were and continue to be aggressive about the CARES Act money received by the county. It spotlights, I think, how our underlying strengths, our economic diversification, our well-educated labor force, is going to help us recover. And it reinforces why we will not be complacent about addressing some of the issues like educational attainment, childhood poverty, the next generation of economic activity in Oakland County. Now, as you may know, the Oakland County received $219 million in CARES Act funding from the federal government back in March. And working in cooperation with our Board of Commissioners, we've appropriated all those funds, and we are really aggressively implementing new and I think innovative programs to support all aspects of the Oakland County ecosystem, if you will. So this chart, if it works, yes, it represents the 5 categories of CARES funding. And we've acted on small businesses, nonprofits, local governments, schools, because all of these, their health and well-being directly impacts the economic quality and the fabric of life in our communities. And we're going to lean in and continue to do those things. Now, you can see a further breakdown of support on this chart. This is the economic chart, okay? The $74.9 million in business support that has been awarded to over 8,500 small businesses and growing, frankly. Let's look at these even more closely. We're talking about 65,000 workers who earned a combined $6.8 billion in revenue in 2019. Nearly 2,000 of these went to minority-owned businesses, and more than 2,000 went to women-owned businesses in Oakland County. So we see the critical importance of support for our small businesses. And this chart just simply illustrates the distribution of these grants. I wanted to make sure that all areas of our county participated in this because we have wonderful organizations, businesses throughout the county. And I think you see here that in partnership with our chambers of commerce, our DDAs, and others, we were able to distribute this money throughout the county, and I think that was really critical. What else I think is critical, by the way, is that Congress extends the CARES Act deadline, which is now at the end of the year, to allow for a full and efficient spending of that money. I think it's helpful if they would do another round of funding to individuals, local governments, as a health and economic stimulus. I think we know that our recovery depends on state and federal governments being fully and active partners. So Oakland County is in a strong position to recover, but our strength is that we cannot be complacent. 3 initiatives that I announced at the State of the County that are underway, I think respond directly to what we will learn in today's forecast. Diversification of our economy. Our new economic development strategy will help us to continue growing and diversifying towards future growth sectors. Expanding healthcare to address inequities in that system. And our Oakland Health 360 initiative is going to expand primary care, mental health, and other wraparound services at our county health clinics, which can help address racial inequities and other social determinants of health. Striving to continue to improve educational attainment. So our Oakland 80 program, which is basically 80% of our adults have have more than a secondary education, that they have a post-secondary degree or certification as compared to our peer counties throughout the country. We want to raise real wages. Lower wage industries were hit hardest by the pandemic. And that's why Oakland County's economic recovery grants honed in on our companies with lower wage employees. But more needs to be done on that front. I think Oakland County is leading by example by having adopted a $15 per hour minimum wage for our employees. We need to make sure that at all levels of government and industry, we push for higher wage growth. These next 6, 9, 12 months are going to be a challenge as we manage the virus until there is widespread availability of a safe and effective vaccine. And we manage our economic recovery. So today's forecast helps us better understand the path before us. And I'm really pleased to introduce Dr. Gabriel Ehrlich and Donald Grimes. Now, for 35 years, Oakland County has partnered with the University of Michigan to do this important forecast. Dr. Ehrlich is the director of the University of Michigan's Research Seminar in Quantitative Economics. Dr. Grimes is a senior research area specialist, and he's been engaged in the state and local government forecasting for 40 years, including every year that we've done this forecast in Oakland County, and he's originally from Oakland County as well. So really pleased to have these gentlemen here with us today. And with that, I want to turn it over first to Dr. Ehrlich, who will present their economic forecast for Oakland County. Thank you for being with us.
Well, thanks very much to County Executive Coulter and to his team for hosting this event. We're very pleased to be able to be here today. And I'll just make sure I've got the technology, there we go, to make sure my slides are on screen here. We're very pleased to be able to be here today to present our economic outlook for Oakland County through 2022. And again, this is the continuation of a long-standing tradition. We're delighted that we're able to continue this tradition despite the unusual and difficult circumstances. As County Executive Coulter mentioned, my name is Gabriel Ehrlich. I'm the director of the Research Seminar in Quantitative Economics at the University of Michigan. And we'd really like to thank this year's program sponsors and event hosts, Oakland Community College and the Oakland County Department of Economic Development and Community Affairs for their support. And again, I'd like to thank County Executive Coulter for continuing Oakland County's longstanding support for this event. And we hope that the information we have to share today will be useful for him and his team and for decision makers throughout Oakland County. This is the University of Michigan's 35th year presenting its economic outlook for Oakland County. I'll be giving the presentation today along with my co-author Don Grimes, and we had 2 more collaborators on this year's forecast, Michael McWilliams and Jacob Burton. You should have a presentation book, hopefully either in front of you or it will be online shortly, that will allow you to follow along with today's presentation. And as I mentioned, an electronic version will be available on our website later this afternoon, and I believe on the county website as well. It's our longstanding tradition to begin our presentation by reviewing how we did in last year's forecast, and we thought just to maintain a little bit of normalcy here in these circumstances, we'd stick to that tradition, and so I'll just jump right to it. This slide contains our track record for annual private sector job growth every year since 1986. And negative numbers in the table mean that we underpredicted job growth, and positive numbers mean we overpredicted job growth. And I've got a box around our 2019 forecast there in the table. Last year, we had forecast that Oakland County's private sector would add 9,888 jobs in 2019 for a growth rate of 1.4%. We now estimate that the county gained 9,160 new jobs last year, or 1.3%, resulting in an overprediction of 0.1 percentage points. That forecast error is well below our average historically back to 1986 of 1.5%. So we felt pretty good about that.
I mean, let me just say, because they don't want to pat themselves on the back, but those are impressive statistics. They have been accurate, as well as you can probably hope to expect over the years. So that's why we continue to bring these good folks back. They've done a great job of
Don't hold us to that standard for this year's forecast.
Well, yeah,
a few new challenges this year.
that's right. There are new challenges this year, and I think just to be clear, we do feel good about the accuracy of that forecast. I think the more important thing is really what is the outlook going forward in Oakland County, and we want to just be upfront. Number one, we know that a lot of people are really having a difficult time right now. That's true in Oakland County, and it's true nationally, and it's true globally. It's a global pandemic. Oakland County has not been exempt from the pandemic, as we'll show you, but we do think we have hopefully encouraging news and hopefully actionable news about the economic outlook. Just to summarize briefly our forecast for unemployment and consumer price inflation, last year we had forecast that the unemployment rate here in Oakland County would decline by 0.6 percentage points from 3.3% in 2018 to 2.7% in 2019. The county's unemployment rate actually increased by 0.1 percentage points to 3.4%. That's still a very low level, but we did miss on that a little bit, and part of that is labor force growth. Our forecast for inflation turned out to be very close. We overestimated local consumer price inflation by 0.1 percentage points. So overall, we classify that as a pretty good forecast for 2019. Of course, we know that the real topic of today's presentation is what is the outlook going forward. And so with that in the rearview mirror, what I'd like to do now is turn to the current state of Oakland County's economy. So I'm going to start with, and as County Executive Coulter mentioned, right now the pandemic really is the number one driver of the economic recovery. And so I wanted to start just by summarizing the course of the pandemic here in Oakland County. The pandemic has severely disrupted the economy this year, both in Oakland and nationally. And it really is our sincere belief that the economy cannot make a complete recovery until the public health situation improves sufficiently that consumers and workers can go about their daily routines safely. The graph that I'm showing you here shows 7-day averages of new COVID-19 cases in Oakland County and fatalities from COVID-19. And the reason is that there are strong day-of-the-week patterns. And if you saw the slide, the dashboard on Oakland County's website also shows 7-day moving averages. That's a pretty standard way to show this data to smooth out those day-of-the-week patterns. New cases of COVID-19 here in Oakland County peaked at about 300 per day on April 5th, before declining all the way down to about 10 per day in mid-June. New caseloads have risen since then as more economic activity has resumed, and new cases ranged from between about 80 to 120 per day from late July through August, with a slight tick down right at the end of the graph you can see there to roughly 70 at the start of September, and they've stayed about there since then. So as County Executive Coulter described that, it's a frustrating plateau, but you can see still below the levels that we saw at the height of the pandemic in the spring. I do think it's important to point out that the profile for fatalities from COVID-19 here in Oakland County has followed a different trajectory than new caseloads. Fatalities from COVID-19 peaked at a level of approximately 25 to 30 per day in the first half of April, and they've since fallen substantially, and unlike new caseloads, they haven't shown that same tick back up that we've seen in the second half of the summer. As of this past Friday, there had been one fatality from COVID-19 in the preceding week. I don't want to downplay the severity of the pandemic or the disease, but I do think it's important just to note that the profile for fatalities has diverged recently from the profile for new caseloads. And we think that the distinct patterns of new cases of COVID-19 and mortality from the disease are consistent with statewide data and with other metrics such as hospitalization rates. We attribute that recent divergence to an improved standard of care, wider testing for the disease, and more favorable demographics among the newly infected. I want to be really clear. It remains to be seen how the pandemic will progress as schools and colleges reopen, the weather turns cooler, and more activity moves into indoors. We do expect to see localized outbreaks of new COVID-19 cases related especially to schools and colleges reopening. But in this forecast, we have assumed that we will not see a return to the uncontrolled spread of the disease that we saw in the spring. We're hopeful that the recent improvements in testing, tracing, and treatment will allow Oakland County's economy to operate with roughly the same level of precautions it currently has in place until a vaccine becomes widely available. We're not epidemiologists, I want to be upfront about that, but to put together an economic forecast these days, you do have to make epidemiological assumptions, and we've assumed that there will be an effective vaccine for COVID-19 in around the middle of 2021. Moving now to economic data, because of the severe and fast-moving disruption COVID-19 has brought about in the economy, we started to track many non-traditional data sources to provide a higher frequency look at the economic recovery in Oakland County than the government data typically provides and the official data. And I just want to point out, private sector data and alternative data is not a substitute for the official statistics that the government works extremely hard to produce. I have many colleagues who work hard to produce those numbers. They are the gold standard. But private sector data does complement the official data in terms of giving us closer to a real-time look at what's happening in the economy. So with that, this chart displays data on daily consumer spending at businesses here in Oakland County in the yellow line and at businesses in the state of Michigan in the blue line. Consumer spending fell by over 40% in Oakland County as of late March and early April, relative to its January average. A strong rebound began around the middle of April, just around the time that the economic impact payments and increased unemployment insurance benefits provided in the Coronavirus Aid, Relief, and Economic Security, or CARES Act, began. You can see on the chart that the daily spending data is a bit volatile. It jumps around a bit, but there are some broad trends that we think we can point out. Consumer spending in Oakland County ran between 7% lower and 2% higher than its January average since July 1st. And it averaged about 1.7% below the January level. And I should say they've released just a bit more data after we finalized our slides. And in the very most recent data for the end of August, spending in Oakland County actually jumped a bit to 9% higher than its January average. I think we shouldn't read too much into those numbers. These numbers are volatile. You can see that in the slide. But I think the basic trend is that consumer spending has mostly recovered from the pandemic here in Oakland County. And you can see, just comparing to the state of Michigan, the springtime drop in consumer spending was a bit less severe statewide than in Oakland County, and we really attribute that to the different pattern of the disease in southeast Michigan, including here in Oakland versus statewide and outstate. And again, you can see for the state of Michigan, consumer spending statewide recovered to its pre-pandemic level at about the end of May, and it stayed roughly at about its pre-pandemic level or even a bit above since then. The situation is a bit more concerning when we look at small businesses in particular. And this chart displays data on the number of small businesses that are open here in Oakland County, again in the yellow line, and then for the state of Michigan in the blue line. And I want to clarify exactly what this data shows. It's essentially based on financial transaction data, so credit card, debit card transactions. And it asks, were there transactions at a business on that day? So this doesn't say, is a business closed for good, right? It says, what was the business open for business on that day? And so I think that's important context. And what you can see is that the number of small businesses that were open in Oakland County fell by nearly 50% as of early April and mid-April relative to the January average. I mean, that's really a stunning number. The number of small businesses open has recovered partially since then. But again, you can see that the recovery in small businesses has been noticeably weaker than the recovery in total consumer spending. The number of small businesses open in Oakland County recovered to 12% below the January average on July 4th, but it's since given up some of those gains. And as of early August, the number of small businesses opened here in Oakland County was about 25% lower than in January. And you can see on the chart that that's really been a statewide pattern. The pattern here in Oakland has tracked the state pretty closely. And it's not on the chart, but I can tell you, having looked at the data, that that's a nationwide trend. It's not just Michigan, it's not just Oakland County, it's a nationwide trend. And I really think this slide speaks very closely to some of the data that County Executive Coulter showed to open this presentation, really bringing home Oakland County's focus on getting assistance to small businesses. Small businesses really do need assistance in this pandemic. I don't think that anybody could have planned as a business owner for a disruption in activity of this scale. And so small businesses really are looking for assistance just to get through this tough time. And you can see in the data that County Executive Coulter showed you, his team has been very focused and in our conversations on getting that assistance to those small business people. And we think that that will pay dividends down the road. One thing to point out is, some of that money didn't really start going out the door just because the way the federal government works, it takes a long time to shovel money out the door, it turns out.
It turns out.
Yeah. And so, and not to make light of the situation, because we know it is very difficult, but a lot of that money started going out the door, in the second half of July, late July. And so, we're only now really going to be able to start seeing that in the data. So just moving out now, zooming out to take a longer term perspective on Oakland County's economy, this graph ends before the pandemic, just to be clear. But I just want to situate our forecast in the patterns of the past. You can see, hopefully on this slide, that Oakland County's economy added almost 183,000 jobs from 1990 to 2000. So Oakland grew at an average pace of about 2.8% per year in the 1990s. But again, the 2000s told a very different story, and you can see that the county gave up the majority of that growth during the one-state recession here in Michigan in the 2000s, shedding about 156,500 of those jobs, or about 86% of the job gains from the 90s. The 2010s saw a return to growth in Oakland County, and through 2019, the county added back about 135,000 jobs, registering an average growth rate of 2.2% per year. Job growth in Oakland County registered 1.2%, both in 2018 and in 2019. And of course, that's partly as the county's relatively low unemployment rate, or frankly very low unemployment rate, began to constrain potential job growth here in Oakland County. In our view, Oakland County's recent success has reflected the diversification of the county's economy toward future growth sectors, which has been enabled particularly by the county's well-educated labor force. Unfortunately, as you know, the COVID-19 recession that started in March of this year has temporarily upended the county's growth along with the national economy. Looking at the unemployment rate, again, just situating where we are in history, Oakland County's unemployment rate fell from 7.5% in 1991 to a low point of 2.6% in 2000. Oakland's unemployment rate climbed to 6.6% by 2008, and then it spiked to 13% in 2009 and 11.8% in 2010. And then just setting the stage, you can see that Oakland County's unemployment rate came down sharply in the years following the Great Recession. Oakland's rate fell below the national rate of unemployment in 2015, and it stayed there every year from then through 2019. Oakland's unemployment rate averaged 3.3% in 2018, and it ticked up just by 0.1% to 3.4% last year. And for context, the U.S. unemployment rate averaged 3.7% last year, so a bit higher than Oakland County's rate. So just to give you some of the high-frequency data, the Bureau of Labor Statistics estimates that Oakland County's not seasonally adjusted unemployment rate jumped from 2.9% in February to 19.5% in March, and it stayed above, in April, and it stayed above 19% in May. It has since fallen very considerably. That's not on this chart. It's down to about 8.1% as of July, which is the most recent data that we have. One thing to get a better sense of Oakland County's prospects in the longer term going forward, what we've done for a long time now is compared Oakland County and its economy to a group of peer counties, which we define as all U.S. counties with populations between 900,000 and 1.6 million residents. And for comparison, Oakland's population is about 1.26 million. The detailed data that we use to make these comparisons is released with a lag. So the data we're presenting today actually is from 2018. We ranked Oakland County among its peers on 5 measures that we believe provide useful insights into the county's economic well-being and also, again, on its prospects going forward. So the 5 measures we considered are first, educational attainment, which we define as the share of the population ages 25 to 64 with at least an associate's degree. The second measure was child poverty, which is the share of the population aged 17 and under who lived within families whose incomes were below the poverty level in 2018. Third was median family income adjusted for the local cost of living. Fourth was the share of high-income seniors. which is the share of persons aged 65 and older with incomes at least 5 times the poverty line. And then finally, the fifth factor that we ranked was the share of employed county residents working in professional and managerial occupations as of 2018. And then so what we do, and we've been doing this for years, we really do think even amidst the pandemic, it's important when you think about Oakland's long-term prospects to ask what are the fundamentals of the economy, right? And so these are the fundamentals of what will drive the economy going forward. Have probably changed some because of the pandemic, but when you really look in the long run, the same fundamentals that drove economic success in 2019 are likely to be driving economic success in 2024 and 2025. So we're really asking people to think long term here, and when we do that, we try to calculate an overall ranking for each of the counties in Oakland's peer group. And so what we do is we sum the 5 individual rankings, and we rank the sum for each of these counties. And Oakland County actually ranked 9th out of its 38 peer counties in 2018. It did slip 3 spots from its ranking in 2017, but I will say the annual data in these data sets is noisy, so a movement of a few places in one direction or the other doesn't necessarily constitute a new trend. And we think it's really important to point out that Oakland ranks within the top 10 in each of the following categories: median family income, where Oakland ranks 5th, educational attainment, where Oakland ranks 8th, and then child poverty and professional occupations, where Oakland ranks 9th. And I think it's important, I don't have the list of counties in my slides here that we're comparing Oakland County to, but you can see that in our presentation book online. The counties we're comparing Oakland to are really some of the top-ranked local economies in the nation. They're counties you would recognize, if you look them up. So it really is tough competition. Oakland's lowest ranking came in the share of high-income seniors, but the county's ranking of 16th on that metric still placed the county within the top half of that peer group. And so, just to summarize this slide, we do believe that Oakland County's strong overall performance in this ranking suggests it's well positioned for the future, despite the current challenges facing the local and national economies. Okay, so now I'm going to talk about county GDP, and this is relatively new data. The Bureau of Economic Analysis recently released county-level statistics for annual gross domestic product, or GDP. And GDP measures the value of all of the goods and services produced in a particular place over a specific time period. And real GDP simply adjusts that measure for inflation, in this case to express everything in so-called 2012 dollars. This slide displays the annual percent change in real GDP, both in Oakland County and in Michigan, between 2002 and 2018, which is the span of time that we can calculate these growth rates for, that the data is available. From 2002 to 2009, real GDP growth in Oakland County tended to underperform the state of Michigan by a bit. Over that period, real GDP declined by almost 20% here in Oakland County, compared to a decline of slightly more than 10% in Michigan. But since 2009, real GDP has tended to grow faster in Oakland County than in Michigan overall, especially in the first few years of the economic recovery from the Great Recession. And when you look at the period 2009 to 2018 overall, real GDP grew by 40% in Oakland County, compared to 24% in Michigan. If you go back to 2001 and then take total GDP growth from then to 2018, real GDP growth was actually slightly higher in Oakland County, about 13% total, than in the state overall, which was about 11%. There's not a lot of industry-level detail for the county statistics. This is new data, it's exciting data, but I just want to point out it's logical. Basically what this slide shows you is that Oakland County's economy has been more cyclical than the state economy overall. And we think that's logical because Oakland County's economy is tied to the cyclical automotive industry. So it does tend to display a significant variation over the business cycle. Moving now to compare Oakland County to the other counties in Michigan, the left-hand map on this slide shows real GDP for each of Michigan's counties in 2018, which again is the ending time for the data. Oakland County's real GDP totaled $101 billion in 2018. That was the largest county economy in Michigan. It was about 15% larger than the next largest county in neighboring Wayne County. And in fact, Oakland County actually generated 21% of Michigan's real GDP in 2018. Private service-producing industries accounted for almost 3/4 of Oakland County's real GDP in 2018, and private goods-producing industries accounted for about 22%, while government accounted for just 4% of Oakland County's GDP. So just comparing to Michigan overall, a higher share of Oakland County's GDP comes from private sector service industries, and lower shares come from goods-producing industries and the government. Looking now at the right-hand map, at least for me it's the right-hand map. I think on your screen it also should be on your right hand. That map shows 2018 real GDP divided by the number of payroll employees, which is essentially a measure of output per worker for each of Michigan's counties. Oakland County's real output per worker was $136,900 in 2018. That was about 26% higher than the state average. And Oakland's level ranked 5th out of the state counties. The counties that ranked higher were typically very small counties. We would suggest you take those rankings with a little bit of a grain of salt. But just comparing to some of the larger county economies here in the state, Wayne County had real output per worker of $121,300 in 2018. That was about 11.4% lower than Oakland's level. And if you look at Kent, Macomb, and Washtenaw counties, which are the 3rd through 5th largest counties here in Michigan, all of them had real output per worker in the $100,000 to $110,000 range, so more than 20% lower than Oakland. So Oakland really does do well on that measure. Okay, I'm going to conclude just by turning to a brief overview of our outlook for the U.S. economy. So I have a few more graphs just showing where do we see the national economy going. And of course, that provides the backdrop for Oakland County's economic prospects. And then I'll turn the county forecast over to my colleague Don Grimes. So just moving now to our forecast for real GDP growth here in the United States overall. According to the Bureau of Economic Analysis's advance estimate, U.S. real GDP fell by 9.5% from the first quarter to the second quarter of 2020. And I just want to be clear, that's about 33% at an annualized rate. So when you hear numbers like 32%, 33%, that's a so-called annualized rate. It says, what would the total growth over a year be if the county kept growing, or if the economy kept growing at that rate for 4 straight quarters? Of course, nobody expects the economy to do what it did in the second quarter for 4 straight quarters. Which is why I gave you just the quarterly growth rate, which again was about 9.5%. We're forecasting real GDP to grow by 4.9%, or 21% annualized in the third quarter, and by another 2% or 8% annualized in the fourth quarter of this year. And that growth path would leave real GDP about 4.4% lower at the end of 2020 than it was at the end of 2019. So when you look at the annual average in the yellow bars, our forecast calls for real GDP to decline by 4.9%. On a calendar year average basis from 2019 to 2020. And we expect the pace of the recovery to slow then, moving into 2021 and 2022. We're forecasting annual real GDP growth to register 3.6% next year and 2.4% in 2022. Real GDP for the United States recovers to its pre-pandemic level by the third quarter of 2022 in our forecast. And it ends our forecast period about 1% higher than it was at the end of 2019. I do want to point out that we've assumed in this forecast that Congress will pass and the President will sign a substantial additional stimulus bill this fall. But as of now, no deal is in place. So I do want to point out the risk that if no additional stimulus is forthcoming, we would expect the recovery to proceed more slowly than we forecast here. We do expect the Federal Reserve to provide very accommodative monetary policy over the duration of our forecast, and we're anticipating short-term interest rates to stay about 0 throughout our forecast horizon. Turning briefly to the automotive sector, which is an important part of Oakland County's economy, national light vehicle sales took a nosedive this spring, registering 8.7 million units at a seasonally adjusted annual rate in April. That was the slowest monthly pace on record since the beginning of the modern data series in 1976. So again, April was the low point monthly going back to 1976. Total light vehicle sales have risen sharply since April, and they registered a 15.2 million unit pace in August. For comparison, light vehicle sales stayed below the 10 million unit pace for 6 straight months in 2009. So I just want to make the point, we really did see a sharp drop in vehicle sales, but it didn't stay at those low levels that we saw in the Great Recession period for as long. We're expecting total light vehicle sales to come to 13.8 million units this year, a reduction of almost 20% or 19% from last year's pace of 17 million unit sales. And then we're forecasting unit sales to climb to 15 million units next year and 16.1 million in 2022 as the broader economy recovers and the public health situation improves. The blue line in this slide shows our forecast for Detroit 3 sales. And we are forecasting Detroit 3 sales to decline this year to a level of about 5.8 million from about 7 million in 2019. But again, you can see on the graph that's still well above where they were in the Great Recession period. And then we're forecasting Detroit 3 light vehicle sales to rise to 6.3 million units in 2021 and 6.7 million in 2022. And I promise this is my last graph of the day. It shows our forecasts of national and local consumer price inflation. We measure local consumer price inflation by the growth rate of the Detroit CPI. When we look at the economy, we believe the COVID-19 pandemic has substantially reduced both aggregate supply in the economy and aggregate demand. But we judge the demand shock to be bigger than the supply shock. And accordingly, we expect national CPI inflation to fall from 1.8% in 2019 to just 0.7% this year. And of course, one contributor to that decline in headline inflation is falling energy and gas prices. We do expect CPI inflation to start picking back up next year to 1.2% and then 1.8% in 2022 as the economy recovers from the pandemic and energy and gas prices start to stabilize. If you look at the yellow line in the graph, that's our forecast for Detroit CPI. The blue line is our forecast for Detroit CPI inflation. And we're actually forecasting a return to local deflation this year for the first time since 2015. So we actually expect the Detroit CPI to decline by about 0.2% in 2020. And then local inflation in our forecast returns to positive territory in 2021, registering 0.8% and 1.9% in 2022. So that's it for my portion of the presentation. I'll turn the microphone over now to my colleague Don Grimes, who will tell us what we can expect over the next 3 years. Thank you.
Okay, thank you, Gabe. This is listening to your presentation. Just to remember how challenging this has been for all people involved in trying to deal with the COVID, even economic forecasters. And if we manage to get within a percentage point of the forecast for this year, we'll be really delighted. 0.1 is probably a little bit much to hope for. So here we have again the slide that Gabe showed you. This slide earlier today. This is the employment total job growth from 1990 through 2019 on an annual basis. We had very strong growth, as you can see, between by the end of 2019, we had completed 10 years of straight job growth. That's a record job growth for as long as the data has been collected. We also know that actual data is available, that employment in Oakland County grew in the first quarter. So we had 10 and a quarter years of solid job growth in the county. Then the bottom fell out of the economy. We estimate that the county lost 156,000 jobs in the second quarter of 2020. 156,000. That is almost as many jobs as the county lost in the entire decade between 2000 and 2009. So you lost in one quarter of the year as many jobs as you lost between 2000 and 2009. That's a pretty steep hit. The U.S., we expect, lost 18.2 million jobs in the second quarter. And believe me, for economic forecasters, these are unprecedented numbers and unprecedented requirements to try to figure out what's going on to the economy. So fortunately, we've actually had a very strong rebound since the second quarter, and we are estimating that in the entire year, as you see in this graph, we will lose 68,000 jobs on a calendar year basis compared to 2019. That's a decline of 9.1%. And it's a larger decline, as you can see, than in any year than in 2009 during the Great Recession, when the job loss during 2009 was about 60,000. So this is a greater job loss this year than in 2009. And again, the forecast number is 9.1. Compare that, if you could get to 9 or 9.2, that'd be pretty remarkable as a forecast, but 9.1 is what we're saying. Next year, we're actually expecting job growth on a calendar year basis of 39,100. For those of you who have a booklet and are looking at the booklet, there's a typo in one of the bullet slides. It says 29,000. The actual number is 39,000. That was my mistake when writing up the bullets, and I never caught it. We're expecting 5.8% growth in 2021. We're going to add 14,000 jobs in 2022, a gain of about 2%, and that will leave the economy on a calendar year basis in Oakland County about 14,700 jobs below where it was in 2019. That's a gap of about 2% on a calendar year basis. In this slide, we compare the job gains and losses in the state of Michigan and in Oakland County between the year 2000 and the year 2022. This is indexed to the value of the peak employment in the state, which is in the second quarter of 2000, and that is an index value of 100. And what you can see here is that the period of the 2000s was a much steeper job loss in Oakland County, that's shown in the yellow line, than in the state of Michigan overall. Oakland County suffered a greater decline in the 2000s than the state. But then Oakland County has recovered faster since 2009, as you can also see in the yellow line, so that by the end of 2019 and actually the first quarter of 2020, the Oakland County had recovered approximately, it was still light by about 2.5% of the jobs from where it was in the peak, but that was much better than the state, which was still down about 5% from its peak employment level. So we were doing very well till COVID hit, and then COVID sort of whacked us pretty hard. Again, the job loss during that second quarter on a percentage basis was larger in Oakland County than it was in the state, so that the decline in the yellow line is actually steeper than it is in the blue line, but then the recovery turnaround is actually also stronger in Oakland County than it is in the state of Michigan. Looking at the data on a calendar year basis, you find that by the end of 2022, Oakland County is 11,200 jobs less than it had in the first quarter of 2020. So it's a shortage of about 1.5% from where it was. It would probably and will probably make up those jobs in 2023 sometime, or late 2023, maybe the first quarter of 2024. That would be our extrapolation of this trend. The state of Michigan, in comparison, recovery is much slower, and by the end of 2022, the state is light by about 3.6% compared to where it was in the first quarter of 2020. Now, in your booklet, there are a table 3, which we are going to reorganize a little bit in the slides that I'm going to show you, and I'm going to talk about the slides. There's also a figure 13, which sort of summarizes the slides that I'm going to be talking about. Because I'm going to redo this reorganization because it makes a little more sense and tells a little better story of what we think is happening than just going through line by industry. So table 3 is sort of a reference tool, but I think the message is contained in the slides that we'll be showing you here. And this first slide shows the total employment gains by year, and also that broken down into the government sector and the private sector. In our forecast, we're actually expecting substantial job loss in both the government and the private sector in 2020. But while the private sector recovers in 2021, we expect the government sector to continue to be weak and actually lose jobs in 2021, and then they both begin to gain jobs in 2022. Now, maybe the government sector will actually outperform our forecast. Certainly hope so. As a government employee, we sort of face doing more with less employees, but hopefully it'll turn out better than what we're saying. Although, again, our government sector includes both Oakland University, Oakland Community College, and the K through 12 schools. So we'll actually are a little more pessimistic than David Coulter about the outlook for the government sector. Sorry about that for all you government employees. But this is where our forecast gets a little bit more interesting. So what we have done is we've divided employment into three categories: blue-collar industries, high and middle wage service-producing industries, and low-wage service-producing industries. And we think this tells a much more interesting story looking at the economy this way. And the first slide I'm presenting is the blue-collar industries. And the blue-collar industries are your industries that include your natural resources, things like farming and mining, the construction sector, the manufacturing sector, including auto manufacturing, and transportation and warehousing. And this is sort of the delivery of a lot of goods and services, and the warehouses where those goods are stored before they're shipped out. And so these are sort of what we classify as sort of blue-collar industries. And what you see is that employment in the blue-collar industries declined by about 9% in 2020, about a little over 9,000 jobs, 9,200. But then we expect a rebound of about 7,200 jobs in 2021 and 3,800 jobs in 2022. So for the blue-collar industries as a group, employment is expected to be about 1,900 higher, or a little less than 2% higher in 2022 than in 2019. So we are forecasting a very strong recovery in the blue-collar industries. That strength is concentrated really in two sectors: construction, which, as you see on this slide, is expected to gain about 2,500 jobs, and in the transportation and warehousing sector, which we expect to gain about 1,200 jobs over the next 2 years. So those are the sectors that are very strong. We don't see much job growth in the manufacturing sector. In fact, we see decline in employment in the manufacturing sector, including the auto sector in the county. Manufacturing has been losing jobs over the long term because of productivity gains. We basically think that trend is going to continue. So output in the manufacturing sector is going to continue to grow up, both nationally and in the county, but we don't think there'll be as many job opportunities as in some of the other sectors. Turning to the higher and middle wage service sector. Now these are industries that where the average wage in 2019 was over $40,000 a year. It accounts for about 58% of total employment in the county. And what we are seeing is that in the industries that are included here are government, wholesale trade, information, financial activities, professional and business services, education, private education, and some of the healthcare sectors. We've highlighted a few industries in this slide in the four little lines that you see below higher and middle wage service industries. But in total, this industry is expected to lose 27,600 jobs in 2020, a decline of about a little about 6%, and then regain 15,500 jobs in 21, and another 7,000 jobs in 2022. By the end of in 2022, we expect that the higher and middle wage service industries will employ 5,100 people, fewer than they did in 2019. That's about 1.2% less than the level of employment in 2019. And if you remember back to that first slide where I showed you the government sector, it's really the government sector accounts for most of those job losses. The other industry that we think will lose jobs is administrative support and waste management. The biggest component of that is temporary help services. We don't think that there's going to be much demand for temporary help services, so that, as you can see in this slide, employment is down by about almost 6,000 jobs in 2022. On the other hand, the industries that we think are going to be growing include financial activities, such as banking and real estate. And then particularly notice the very strong growth in engineering and architecture services, up about 2,500 jobs. This reflects the ongoing transformation of the auto industry towards autonomous vehicles and electric vehicles, and we expect that this industry, which is one of the great industries in Oakland County, has been one of the stalwarts for decades, is going to really show a lot of growth going forward, and you'll continue to need more employees in these very much hot fields. So there's a mixed bag in terms of industries within the high and middle wage services sector, but in total they get back to almost where they were in 2019. Lower wage services industries. These are industries where the average wage is less than $40,000 a year in 2019. As Gabe mentioned, they tend to have a lot of hands-on touching activities where there's close contact with the customers as well as and patients. This industry includes retail trade, leisure services. Those are the two biggest industries. There's another category called other services, which includes barber shops and beauty parlors and all sorts of laundromats, sort of things that involve, services. And there are some healthcare industries that are also fit, including nursing and residential care and social services. So those are sort of the major industries that are in the lower wage services category. And as you can see in this slide, that the industry is expected to lose 31,300 jobs this year. That's a decline of 15% in employment in the lower wage services industry. Now this is really unusual in economics. In fact, the decline in jobs in lower wage services is going to greatly exceed the job losses in the blue collar industries and in the higher and middle wage services. Normally, the blue collar industries tend to lose the most jobs during a recession. That's a historical pattern going back since economics has been in existence. This time we are getting a recession where the job losses are in the lower wage service industries. The recovery is about 16,400 jobs in 2021 and 3,500 jobs in 2022. We're going to be short about 11,000 jobs, or a little over 11,000 jobs in 2022 compared to 2019. And that's 5.6% fewer jobs in these lower wage service industries than in 2019. If you look at the detailed industries here, you see that some of these lower wage service industries are growing, like nursing and residential care. But the overwhelming industries are declining. And particularly retail trade is going to lose about a little over 4,500 jobs, as you see, over the next 3 years, and is declining in 2022 compared to 2021. Retail trade has been in decline for a long time in the data. It's sort of a trending industry as bricks and mortar stores are replaced by online shopping and productivity gains. We expect this decline to continue in the years beyond 2022. We don't see any growth in the retail sector. We expect decline. On the other hand, another industry that lost a lot of jobs, an overwhelming number of jobs in 2020, 22,000, is leisure services. This industry is still well short of its 2019 levels in 2022, but in contrast to retail trade, we expect this industry to add jobs beyond 2022 as the economy recovers and vaccine, and so people can go back to enjoying restaurants and recreational activities. Here's the unemployment rate for Oakland County in the United States. As Gabe mentioned, the unemployment rate peaked at 19.5% in April of this year. For the year, we are expecting that the unemployment rate will average 9.1% for 2020. Now note that this unemployment rate, while still very high and very distressing, is much lower than it was in 2009 and 2015. So on an annual average basis, the unemployment rate this year in the county will be much lower than during the Great Recession. We expect the county's unemployment rate to continue to fall to 7.2% in 2021 and 6% in 2022. In 2022, the unemployment rate in Oakland County will be about a half a percentage point below the state of Michigan, and about a full percentage point, or almost a full percentage point, below the unemployment rate in the nation. Now, there are a couple of things to note. One reason why the unemployment rate does not go up as much in 2020 as it did in prior years is that our labor force is expected to decline by 4%. So people have dropped out of the workforce due to the pandemic, and their expectation that they would not be able to find a job. So the unemployment rate, the labor force declines by 4%, and that helps hold down the increase in the unemployment rate. So the unemployment rate would have been substantially higher, probably in the range of 14%, 13 to 14%, if the labor force had not declined. Now, the labor force begins growing again in 2021 and 2022, but by 2022, we are still expecting the labor force in Oakland County to be down by more than 10,000 potential workers than it was in 2019. So the labor force shortfall is going to be a problem for the county that you're going to have to address in the years beyond 2022. Now, this is my last graph, and it is the average real wage in Oakland County from 2001 to 2022. The green line here, at least we give some recognition to Michigan State, is the total. The dotted blue line is for the blue-collar industries. The yellow line is for higher and middle wage service industries, and the solid blue line is the lower wage, the service industries. These industries are defined as we mentioned previously. Now, traditionally, the blue-collar average wage is actually a little higher in the county than the high and middle wage service industries as you look. It then slipped below the average wage in the high wage service industries. I believe that was in 2018, and that we expect that to continue to fall below the higher wage service industries. Now, the overall real wage, we expect to increase by 1.6% in 2020, which is actually very healthy and undoubtedly will surprise people that the wages are going up in the county. Now, that is confirmed when we look at the data for the state and the nation. Real wages are going up this year. In 2021, we expect an additional gain of 1.8% and a gain of 1.3% in 2022. So one of the reasons for the paradox of the increasing wages during this recession is the changing industry mix. Remember, going back to the slides that showed you what industries were losing jobs, and the greatest job losses were in the lower wage service industries. So what happens is that our industry mix has changed towards higher wage industries, which raises the average wage. So as there's less job growth and a greater decline in 2020 in the lower wage industries, that mathematically will send the average wage up, even though most people will find that very bizarre when they think about it. This shift towards shift away from lower paying industries actually helps increase the average wage, but it may be sort of artificial in that, in some sense, because it's really sort of an industry mix issue. But overall, over the next 3 years, we're expecting pretty solid wage gain of about 4.8%, which helps make up for this long, extended period, as you can see, between 2001 and 2019, where the average wage in the county really was sort of declined in some years, but then flattened out in others, grew in others, but eventually you end up in about the same point in 2019 as you were in 2001. So there's been a long period of essentially no wage gains, but we're finally going to see some wage gains over the next 3 years in real terms above 2001 levels, but it's mostly because of a change in the industry mix. And I only have one last comment to sort of conclude. And that is that the biggest challenge for everybody in the county and the nation and the state in the near term is to deal with the economic fallout. Well, actually, the biggest problem is dealing with the COVID-19 virus and its repercussions on health. But from an economic perspective, it's dealing with the fallout in terms of the lost jobs and lost income for our communities. And so that's the first thing that everybody's going to have to solve and deal with. But over the longer run, there are two other real problems that we are going to have to deal with. And as you are designing your economic strategies and your economic development plans, you're going to have to address two things. First is the state of Michigan and Oakland County, we're old. And as the baby boomers retire, we are going to have a real shortfall of potential workers for employers as the economic recession ends. That's an absolute certainty that when you start looking out in 2023, 2024, assuming that we get the economic recovery that we're forecasting, employers are going to have a very hard time finding workers. The second feature of this economic recovery that we've had since the Great Recession and even before is that there was a widening income disparity in the country, in the county, in the state. Yeah. The COVID-19 recession has exacerbated that disparity, and we believe that the growth coming out of the COVID-19 recession will also exacerbate that disparity. And so one of the things that you're going to have to deal with labor shortages and growing disparity once you get past dealing with the COVID-19 and its recession. Thank you.
Well, thank you. Thank you both, actually. That was a wealth of information. Maybe like some of you, your head is spinning a little bit. That's a whole lot of information. I hope that you were all able to get either a hard copy of the presentation. You know, there's a lot of just really juicy stuff in here that you need to digest, and do that. As we've said, it'll also be on the website. Reach out to us if you need a copy of those. I want to mention that we're joined today on this economic lunch, not a luncheon, but our panel, by members of our COVID-19 Economic Recovery Task Force. In the spring, I brought together leaders from business, nonprofits, health, academia to help us craft stabilization and recovery efforts. And so early grants, our 15,000 reopening kits, for instance, for business and nonprofit reopening kits, were all a direct result of sort of the advice and counsel that we got from this great group of people. So Pete Provenzano, who happens to be the chancellor of Oakland Community College, he was one of our 4 co-chairs. I'm so grateful for his work and the rest of the co-chairs. And I think we have a little bit of time for some questions. And we've asked for these in advance, and I think Pete, as one of our 4 co-chairs, I'm going to give you the opportunity to ask the first question of our experts from University of Michigan. So do we have Pete on? You got to unmute yourself. I know that much.
All right, can you hear me now?
There we are. Yep, we got you, Pete. Thanks.
Okay, wonderful, David. Thank you. Wonderful program. Real quick, because I know you're running short on time. County Executive Coulter mentioned Oakland's 80 by 30 program, and just a week or so ago, the governor announced free community college tuition for all of our frontline workers. How do you see these 2 initiatives helping the labor shortage that you spoke about, as well as wage disparity in the future?
All right, hang on a sec, Pete. We're having a little challenge hearing your question. I think we're going to try to boost it. Life in 2020. All right, hang on. Just give us one sec, Pete, because I want to make sure. It was a little late to hear your question. I apologize for this, everybody. No lunch this year. lousy audio. We'll get there. We're almost there. Okay? Go ahead, Pete. I'm sorry. If you repeat your question, I think we got that worked out.
Sure, will do. So County Executive Coulter announced Oakland's 80 by 30 initiative, and recently the governor announced free community college tuition for all frontline workers. How do you see these two initiatives helping the labor shortages and wage disparity that you mentioned in your presentation?
Yeah. So I'll kick that off, and then I'll ask our experts to add whatever they want. But the question was essentially, in Oakland County we started Oakland 80, which Pete was also involved in, and I mentioned earlier, which is our main effort to try to raise the educational attainment of people in Oakland County. We want more people with degrees and certifications in order to qualify for these jobs that we know are coming to address this labor shortage, and I mean, frankly, on both fronts, address the labor shortage that we know are coming, but also this stagnant wages, I would call it stagnant, or to help boost wages in this county as well. And Pete, I think I heard you mention the governor's program, the college tuition for essential employees. And so I wholeheartedly support the governor's initiative in this area. And frankly, even on Oakland 80, we piggybacked on her 60 by 30 initiative, which is the same thing. Michigan was one of only 9 states in the entire country that didn't have an educational attainment goal. And that's why we were starting to fall behind. We actually fell behind Kentucky last year. And nothing against the great state of Kentucky, but that should be a red flag to people in Michigan when our educational attainment slips behind states like Kentucky, which has historically not done as well as us. So it's why we leaned in on Oakland 80, and I think it's an important part going forward. I think the governor's program is going to be helpful in this, but I'd certainly defer to the economists to talk about how these sort of, maybe more generally, how do these educational attainment initiatives, help get at this issue of labor shortfalls and wages and the like.
Don, do you want me to take a shot first, or you want to take a shot first?
Well, it's sort of well known that people with more education get paid more. So that's a universal truth almost. And so the idea of trying to raise wages, one of the best ways to do that is to increase the educational attainment. I think that we may also have to sort of broaden our metrics in terms of educational attainment, because another aspect of is sort of like the learning by doing, or learning to be entrepreneurial. There are a lot of tasks that people have to address as well. It's particularly important for the community college, I think, to add programs that would help individuals start up small businesses and know how to manage small businesses if going forward. And I'm sure that there's a lot of people who have great ideas for a small business, but really don't know all of the tasks that are involved in terms of complying with the regulations and paperwork and getting taxes done and human resources tasks. So I think that's another area where there's no such formal certification for somebody who is trained to start a small business, but it'd be a great program for the community college.
Well, I'm glad you said that, because part of our new economic development strategy, and he didn't know this, so he didn't tee that up, is going to be what can the county do, working with our colleges and other partners, to help make it easier, not just to attract businesses to Oakland County, but help you to start and grow a small business here in Oakland County. I think it's almost easier to help a business grow than to attract a new company in many instances. So that is something that we're going to lean in on. So Barbara Whitaker, I hear, has the next question. Hopefully, Barbara, you can unmute yourself and ask the question, and hopefully we'll be good at hearing it.
Yes. Can you
Barbara.
hear me? Can
Barbara?
you hear me?
Yeah,
Yes, I'm
but
here.
it'd
Can
be
you hear
helpful
me?
if
Okay.
somebody could boost that or help, or maybe even tell us what your question is. Go ahead, Barbara.
Okay. First of all, thank you for this great insight and information around the economy. It's critically important at this time that we keep our eyes on it and kind of watch the things that we need to do to continue to grow and maintain and help our people of Oakland County. I noticed that there was a reference to unemployment compensation in some of the data that you talked about, that additional $600 per week, and even to the point that you mentioned you took into consideration the potential of an additional supplemental help from the federal government and a CARES Act package. My question is that information included in the total outlook for recovery and in the numbers for Oakland County? And also, is the information that was shared with us and shared with us by Executive Coulter about the stimulus that Oakland County did with small businesses, giving them grants and things like that, is that included in the economic outlook in terms of the impact of that in those numbers?
Great. That's a great question, Barbara. I appreciate it. Was everyone on the online able to hear it? Okay. Perfect. So I think, Doctor, if you don't mind, why don't you take a crack at that?
Thanks very much. Barbara, thank you for that question. And just to be, sure I heard it correctly, the question, as I understood it, is really about have we accounted for all of the different ways that the CARES Act provided fiscal stimulus and relief to residents in Oakland County, and I believe also to businesses in Oakland County, outside of the unemployment insurance compensation, which we did mention specifically in the report, and also what about spending from the state of Michigan and Oakland County, and when will we start to see the impact of that spending? So I think as long as I got the basic outlines of the question correct, I'll just go ahead and move forward. So the first answer is yes, we did account for all of the assistance that was contained in the CARES Act as well as we could. Some of the other big parts of the CARES Act included the economic impact payments. Those, or the so-called recovery rebates, those were the checks of $1,200 per adult and smaller levels for minor children. Those also made a big difference, and you can see them in the data. I won't try to flip back through my slides because you never want an economist improvising with technology on a live event. But you can see if you look at the chart that we showed for consumer spending in Oakland County, you really can see it starting to pick up right around April 15th, which is when those economic impact payments started going out, and of course, that's also close to when people started receiving the extra unemployment insurance. And then the other thing to point out is the Paycheck Protection Program, the PPP, which was assistance to small and medium-sized businesses. And I think what you can see is, that really did make a difference. We're starting, and this is true for all of these programs, we're really starting to get to the point now where that assistance is starting to wear out and to expire, and really has in some cases expired. And I think it's an open question of when we'll start seeing that in the data and whether we're going to see more stimulus. As I believe I mentioned, we did assume that there would be more stimulus coming from Congress in our forecast. I should say we were on the smaller side in terms of the total package, the total dollars we assumed, than a lot of the chatter you hear from Washington insiders and Wall Street insiders. And we tried to thread the needle. The reality is we're in the second half of September. We don't have another stimulus deal. I do think we have to start preparing for the possibility that there won't be another stimulus. But right now, our current forecast assumes that there will be some additional assistance at a smaller level. And I think just getting to the state and the county, where we really are focusing on the state and local governments is in terms of employment. Something that people might forget now is that state and local government employment really didn't recover from the Great Recession until well after the private sector. And if we don't see more assistance, so I think Oakland County is actually in a very enviable situation as far as these things go, but still, in some ways a difficult situation in terms of employment. County Executive Coulter mentioned furloughs and measures such as that. But we really do worry that we're going to see job losses, and we're not going to see any job growth in the state and local government sector. That's going to hold back the economic recovery if we don't see more assistance, in my opinion. Thank you.
Yep, that's great. And I should point out that while I was optimistic and positive about where we've been in Oakland County so far, we certainly understand that without more stimulus or another spike or without additional assistance, that could change here. So it's certainly something we're keeping our eye on as well. So Dave Woodward, I think, has the next question. Dave is the chair of our board of commissioners, so they're our partner. I gotta have Dave in on having a question. Dave, you want to unmute yourself and ask your question?
Yes, can you hear me, Executive?
Yes.
Okay, great. Well, thank you, gentlemen. It's kind of, I'm trying to combine these two things because, as we get ready to approve our budget so that we can continue to support a lot of these economic initiatives to help fuel the conditions to help our economy recover. On one front, we haven't seen the COVID recession impact residential property values, which is a massive, it was the bulk of the revenue that comes in to be able to support things. Do we expect that to remain the case moving forward? And obviously, economics and everything play into that. And then related to that, our budget, we're anticipating an estimate an increase of 1.8% in taxable value. That's based on a 0.8 CPI and 1% real estate activity. Going forward. What can we expect on real property tax to be? So I guess I'm talking about property tax value as it relates to all of this going forward as we continue to work on recovering the economy.
Well, thanks, David. I'm not surprised you would ask this question. Property value here in Oakland County is something that we keep our eye on very closely. It's why our county government budget has been different than some of the other budgets you've seen, but we do rely heavily on property values. So I don't know who wants to take it, but yeah, what do you think about property values in general and our forecast of 1.8%? We in the what would you think about that?
Thanks. So I think the first thing to say is we really focused in on the economics for this forecast. So we did not forecast tax revenues per se. So in terms of revenues, I will take a pass on answering those questions, without having dug into the data. But in terms of the economics with property values and residential property values in particular, I want to say I really think that it's too early to say with a lot of confidence what's going to happen. House prices, residential housing has actually held up substantially better than might have been expected given what's happened in the labor market. But there are some complicating factors that make it hard to interpret that data in terms of mortgage forbearance. So there has been massive federal support that has allowed people to defer payments in terms of eviction moratoria. That's something else to keep an eye on that has really kind of suspended the housing market in many ways in place to really blunt the impact of the pandemic and the recession. And I think that it's a difficult question to ask, well, what's going to happen as those temporary programs come to a close? One thing that we do think is here to stay for the longer term is rock bottom mortgage rates. Okay, those are low. That does, all other things being equal, that supports housing values. And we do expect interest rates to stay low by historical standards for quite some time. So I do expect as some of those federal programs, for mortgage forbearance and eviction moratoria, as those start to end, I do think that the housing market isn't going to show quite the same buoyancy that it has shown in the short run. But there are some decent fundamentals, and I think for people who are scarred from the Great Recession, I think it's important to point out the housing market really was fundamentally in a better shape and much better balanced coming into this recession than it was coming into the Great Recession. So that's kind of the economics as I see them. Thanks.
Thank you. This is cool. We got a question on on social media. And so let's just take one of those because everybody's welcome to ask questions, and we got one. This is pretty straightforward. I think I can handle it. But Ricky Bradford asked, you mentioned the 15,000 COVID-19 reopening kits. What are they and what are they for? So part of our effort to assist our small businesses was to literally get in their hands not only the guidance, because I know it's our responsibility from a health department perspective to tell people what the rules are, but we also wanted to help our small businesses figure out, and they're all different, how do we get open? So not only did we give them the health orders and the guidance, but we literally gave them a box of PPE, which was very difficult to get at the time, especially the touchless thermometers. They each had one of those, and the gloves and the sanitizers. They had stickers that you could put on the floors so that keep for social distancing. They had the masks. They had posters. They had a whole bunch of stuff, sanitizers and the like, that were, especially at the time we gave them out, very difficult to get. And we literally gave out, with the help of our DDAs and our chambers of commerce, we got out immediately 10,000 of them out the door. And then we realized we needed more, and we realized we needed to include our nonprofit organizations, our faith-based organizations, our churches and synagogues and mosques and the like. And so we ended up doing 15,000 of these kits, and they were large, and it seemed like a great idea at the time, and it was, but you didn't realize just what a task it is to create 15,000 of these. And I say that I want to thank Roger Penske, who reached out with an empty warehouse and said, hey, do you guys have use for a warehouse? And I said, yeah, I got 15,000 kits to put them in. But that's what we did. And so it's just an example of the way that we have tried to not only be the organization that puts out the orders, but we've also tried to help businesses navigate the reopening as best we could. And so that's what I was referring to by those. So thank you for your question on social media. I think Tom Kelly, who actually helps run Automation Alley here in Oakland County, has the next question. Tom, are you there, and are you unmuted?
I am here. Can you hear me okay?
Yes, we can hear you.
Okay, terrific. So, by the way, Dave, I got to tell you, we were a recipient as a small nonprofit. We punch above our weight, as you know, but we are small when it comes to staffing. We got that kit. It was awesome. I want to thank you on behalf of my employees how much that kit mattered to us. So, but as you also know, we work pretty tightly together around this whole digitization effort of small and medium manufacturers. So the report shows a decline of 1,800 manufacturing jobs in Oakland County over the next 3 years. So we're making a concerted effort to try and stem that tide and say, we need to develop our small manufacturers and help them digitize and help them become more efficient and effective. In the larger companies, efficiency and effectiveness results in job loss. If you're small, it typically results in increased sales, being able to do more, which requires more people. Does the report account for the efforts we're trying to do with Oakland County in digitizing our small and medium manufacturers?
So that's a great question, Tom. Manufacturing, it's interesting. Oakland County maybe is not perceived as so much manufacturing as it is the other high tech and office and the like, but it's still a very important part of our economy, as you well know. And Industry 4.0 is going to be an important part of our strategy and making sure that we maintain it. But I will ask the economist, to what degree sort of was the state of manufacturing taken into account in this, and how has COVID impacted that?
Well, thanks, and thank you, Tom, for the important work you do at Automation Alley. Obviously, we love hear about your work a lot. I think the way to say this, and hopefully Don will have a little bit to add in on top. As the way that we kind of see the outlook for the manufacturing industry is that there are supply side difficulties, and many of those are now receding. By and large, people have been able to reopen their operations and keep people safe. I don't want to say that there are no concerns there, but largely it's the case that people have been able to reopen at this point in our estimation. But the reality is that the consumer demand is going to be a limiting factor in the manufacturing sector more generally. Just the national economy is not going to be at 100% over the next year or two, and when you see manufacturing, it is a cyclical industry. Especially in the durable goods sector. That's that's for Michigan. That's been both a blessing and a curse. Having the auto industry on net, I believe, has been definitely a blessing for Michigan. But in terms of the cyclicality, what you see is that when the national economy is expanding and doing well, Michigan tends to do very well. When the national economy is shrinking, Michigan's economy tends to shrink by even more. It's a more cyclical economy, and that's precisely because manufacturing is such an important part of our economy, and it's a cyclical sector. So I think that's really where the outlook comes from, is more on the consumer and on the demand side, and just the economy generally being a little bit weak. Don, do you have anything?
We're not forecasting auto sales to get back to 2019 levels through 2022. They're still going to remain substantially less than they were in 2019. And that obviously will have a very adverse effect on Michigan and in Oakland County. The auto industry will still be struggling to sell vehicles going forward. Not as bad as it was in April, but the demand is still going to remain weak. That's partly because we had sold so many vehicles in the years before 2019 that we'd satiated sort of demand, and that it was not going to be a growth sector even without COVID. We were forecasting before COVID that the auto sales would have come in a little less than 2019 levels through 2022, and now it's going to be significantly less.
Thank you. I'm sorry. I was distracted by the fact that you remind me of Leslie Nielsen, the actor, the comedian. I said your job isn't as funny, but you add a certain life to it. Yes, you do a good job. Have you ever heard that before? Sorry, I got distracted there for a minute. But we do have another question from County Commissioner Nancy Quarles. And Nancy, you're there, I believe. If you unmute yourself, go ahead, Nancy, and ask your question.
Thank you, Mr. Executive and the guests. My question is on your packet, or I should say the hard copy packet that we received. It was Table 2. And in Table 2, it compared Oakland County with other like counties. And you used 5 factors, which you described in your presentation. The one that I would like a little bit more clarity on is child poverty. How are you defining that, and how are you determining it? And the last question would be, from your experiences, what are some of the best practices to ensure that that number can be reduced more in Oakland County? Thank you.
Yeah. Thank you, Commissioner. The issue of child poverty, I think, is one we want to talk to. And if I may, I want to just add something onto that, because I was struck by when you talked about us being compared to our peers. Child poverty is obviously an important one. And I'm curious, the notion of where we sort of fall down is high-income persons age 65 or over. So I guess I'm a little just the question, what is it, what's critical about that demographic and that data point that is representative of an overall picture? But also to Commissioner Quarles is then what are the best practices around childhood poverty, and what should we be thinking about and doing in that space for both of you or either of you?
Don, do you want to start with?
Well, I'll tell you why 65 and older is important, and we'll let somebody else address. It's the fastest growing demographic. Are people who are old, 65 and older. It's growing very fast nationally and in the state. So, you want them. And people, once if they're affluent, 65 and older, they have a lot of discretionary income, which means that they're going to be supporting a lot of your leisure and recreational industries. I'm turning 65 tomorrow, so as I enter that cohort, I guess I'll advocate for it. But
happy birthday.
Somebody else can try to figure out how do we solve the child
Well,
poverty
happy
problem.
birthday, though. Thank you, because it struck me that I hadn't seen that data before.
Well, yeah, thank you, Commissioner Quarles, for that very important question. Don is being modest. This is work that he's done for a long time. It's very near and dear, to Don's heart and to my heart, to really do what we can to measure and encourage an inclusive economy and shared prosperity in Southeast Michigan and beyond. And we do have a report that we've released recently for the Southeast Michigan Council of Governments that looks at shared prosperity in the Southeast Michigan region, and we will be presenting that next month at a meeting for SEMCOG, so we hope you're able to watch that. But just to your question about how do we define and measure child poverty, just the official definition that we used, it's the share of the population in Oakland County aged 17 and under, so minors, who lived within families with incomes below the official poverty level as of 2018. That data comes from the American Community Survey, which is what used to be called the long form of the census, but they now do it every year. They sample about 1% of the United States population. That's the source data that we use to tabulate those numbers. I think, in terms of best practices to reduce child poverty, it's not my area of particular research how one would reduce it, but I think that a few things that we can say are, first off, just a strong economy and a healthy economy is the number one thing that the government can do to provide people a pathway out of poverty is to make sure that there are jobs out there for people who want to work. But then, the other thing, to be straightforward, is giving families assistance does help keep people out of poverty and families with children out of poverty. It's obviously a really thorny problem. I don't know of any place on earth and any place in the United States that has solved this problem completely, but we always include it in our measure because we think it's so important for assessing how is Oakland's economy doing in terms of generating inclusive and broadly shared prosperity.
And I would just add to that point that while we have been rightly focused on attracting high-wage jobs to Oakland County, which continues to be part of our focus, we need to be creating jobs at all income levels so that a family can get an entry-level job, and then there's a pathway to success and to move up. And as we increase wages and provide jobs at all levels in Oakland County, I think that is part of the pathway to getting entire families moved out of poverty, which we still have in Oakland County, and is still a concern of ours. So I think it's just broadening our thinking around job creation and saying, you know what, a $15 an hour job at Amazon has a value to a family that's below the poverty level today, and attracting a corporation from overseas with high-paying, high-tech jobs is important as well. It's making sure that we're keeping our eye on all of those things. And as I started out by saying, increasing wages to the extent that we can help do that. So appreciate the question, Nancy. So I think because it is 1 o'clock or just a couple minutes after, we're going to need to wrap it up. Thank you so much, first of all, to my two panelists for being here and for all the work that you put in to create this report. Again, I'll say it again, if you don't have the hard copy, we can get it to you, but it's also available on our website and on their website. So please take a look at this, because this is, I don't like to pay for reports just to have them collect dust. So not only is this not going to collect dust here at Oakland County, but I think what you've heard today is that this can have value whatever you're doing, whether you're an educator, whether you're a business person, you're running a nonprofit. I think that these gentlemen have helped give us a bit of a roadmap in terms of what we can expect over the next 3 years. And I hope you really spend some time and look at this and figure out how we can help you navigate the growth of your organization as well. So take a look at that. Thank you all for being here. Hopefully next year we'll do this as a luncheon, but you know what? We're just going to go with the flow. And so even with a few technical hiccups, I hope you found this helpful and enjoyable. I certainly did. Gentlemen, I can't thank you enough for coming back to Oakland County and helping us produce our 35th annual economic outlook. So thanks so much for being here, everybody, and enjoy the rest of your day.